Wall Street doesn't just like Bitcoin, they love Bitcoin.
Bitcoin just set a new high score, beating its own record. If you've been playing the Bitcoin game, or you're about to press start, or you're like me and you like to watch from the sidelines and make videos about it, well, this video is for you. We'll decode all the factors that are boosting Bitcoin's score and see if this level is any different from the ones we've played before. We'll try to understand whether Bitcoin can actually hit 6 figures this time. By the end of this video, this Bitcoin rally will hopefully seem less like a final boss battle. Let's go. First up, let's talk about ETFs, or exchange traded funds. To understand ETFs, let's use an analogy. Imagine you're a fan of music and you want to invest in music industry. Now, you could invest in a single artist, but that's risky because their next album might not be a hit. So instead, you decide to invest in a variety of artists across different genres. This way, even if one artist doesn't do well, others might, and your overall investment would still be profitable. This is essentially what ETF allows you to do, but with stocks instead of musicians. An ETF is like a basket of different stocks. When you buy a share of an ETF, you're essentially buying a piece of that basket, and therefore you're investing in all the stocks it contains at once. This allows you to diversify your investments and reduce risk. Now, let's talk about Bitcoin ETFs. A Bitcoin ETF, like any other ETF, is a type of fund that tracks the price of an asset, in this case, Bitcoin. They allow investors to trade and invest in Bitcoin without having to deal with the complexities of directly owning and storing Bitcoin themselves. The recent approval of 11 spot Bitcoin ETFs by US Securities and Exchange Commission is a big deal because it opens the door for many people and institutions to invest in Bitcoin. This increased demand can drive up the price of Bitcoin. So the approval of Bitcoin ETFs is one of the reasons why Bitcoin price is soaring recently. Now, let's move on to a concept that's at the heart of Bitcoin's design, halving. To understand halving, imagine you are at the gold mine extracting gold every day. But every 4 years, the amount of gold you extract halves. So, if you were extracting 10 ounces of gold a day, after 4 years, you'd only be extracting half of it. That means 5. In the world of Bitcoin, this is exactly what happens. Bitcoin miners are rewarded with Bitcoin for verifying transactions and adding new blocks to the blockchain. But approximately every 4 years, this reward is halved. This event is known as halving. So why does halving happen? It's built into Bitcoin's design to control inflation. By reducing reward, the rate at which new Bitcoin is created slows down. If the demand for Bitcoin remains the same or increases, this reduced supply can drive up the price. Historically, halving has been a significant event. For instance, the last halving that occurred in May 2020, when the reward went down from 12.5 to 6.25 Bitcoins. Following this event, Bitcoin's price saw a substantial increase. So, the anticipation of halving coupled with the actual decrease in Bitcoin entering the market can lead to a surge in Bitcoin's price. If you've made it this far, please consider subscribing and make sure to like the video. Algorithm loves it. Alright, back to it. Inflation is a term you might have heard of in economics. Now, how does this relate to Bitcoin? Bitcoin was designed with a maximum limit. There can only ever be 21 million Bitcoins. This scarcity is in direct contrast to traditional currencies like US dollar or a pound, which central banks can print more of when needed. With Bitcoin, the supply is gapped, which makes it immune to this kind of inflation. Bitcoin, with its limited supply, has become a popular safe haven asset. So, as inflation increases and the value of traditional currencies decreases, demand for Bitcoin as a safe haven can drive up its price. Now, before you start thinking of Bitcoin as a superhero of financial world, let's not forget every hero's got their kryptonite. So, we've covered some big reasons why Bitcoin's been hogging the spotlight. But lurking just off stage, there's a supporting cast of reasons itching for their moment in the spotlight. We cannot overlook the regulatory drama. Uncle Sam's been eyeing Bitcoin like a hawk, ready to swoop in with
tax laws
faster than you can say.
Crypto gains.
And let's not forget, Bitcoin isn't just an investment. It's a speculative asset with prices driven more by perception than intrinsic value. And I'm sure you're aware of FOMO, that pesky fear of missing out that whispers in your ear, tempting you to dive headfirst into the Bitcoin pool without checking the depth. So, will Bitcoin hit six figures? Well, this time it's different. That we can say for sure. So it probably can. But although ETF approval is a big move, that also means big corporates are now formally involved. And we all know what that means. I'd love to know what you think about that. So let me know in the comments below. And if this video provided you with any sort of value, make sure to subscribe and leave a like. Until next time.